Good morning, traders and investors. Steve Gans here with the Options Income Academy, providing another market update. And I'm going to share a trade idea with you a little later in this video. Now, these trade ideas are always, of course, for education purposes and paper trading to get people familiar with different concepts in the options world. So I want to start off by going through all of our various indexes. Of course, I always start with SPX, which is the index for the S&P 500. As I've noted in previous weeks, this has done a couple of things. One, this really long-term channel that's been in play for many, many weeks. Let me get my drawing tool working here. So this channel has been in play for almost 2 years, with the exception of we did drop out of the channel around those initial tariff announcements. Now we've crawled back into this channel in the S&P, and I think we're going to probably start resuming in the main body of this channel. Now, the other thing that's been happening is we've been building this wedge here. This wedge pattern has been forming on the way up. Many times, these do break out to the upside, which also is the thesis for putting this whole thing right back, traveling back and forth within this channel. Now, you'll also note here that volume is staying steady. On up days, we've been having more volume in general, although it is starting to even out a little bit. We're starting to have some of the down days are having some decent volume in them as well. So right now, I don't consider volume to be quite as much of an indicator as I do just the general chart pattern and the general movement in the market. All that said, there's a couple key things on our horizon here right now. Next week, we have what's probably going to be a pretty significant Fed announcement. Right now, I believe traders are pricing in a decent reduction in interest rates. If that does not pan out, I think we might be looking at a bit of some down move, or if we don't quite get what we are expecting. Right now, some people are expecting a 1/4 point drop, some are expecting a 1/2 point drop. So depending on where that lands, that could change this pattern a little bit, but we won't know until next week. And then there's also the pending government shutdown at the end of this month, which is also going to start to play in as we get a little later into the month and we see where that whole thing pans out. Now, all that said, right now, I am still in a neutral to bullish mode. And the reasons, again, why, or that's what the chart patterns are telling me. So now we'll look at SPY. SPY is going to be essentially the exact same pattern, of course. That's just the ETF for the S&P 500. And then ES futures are going to look about the same. I'm going to come back to you with a potential trade idea on SPY. Again, a paper trade or an educational trade idea. So this is the S&P futures. Again, I don't have all my lines drawn in here, but if I did, the patterns would look virtually the same. And then we have the volatility for the S&P 500. We can see that volatility is back here pushing on all-time lows. So there's just no fear in the market. There is no one buying insurance on their portfolios right now because they're not seeing that fear. Then, of course, we take a look at the Qs. The Qs are going to be a very similar pattern, but the Qs have stayed stronger through this entire thing. They've largely stayed fully in the channel, with the exception of that initial tariff dropout. Volatility on the Qs, very similar, very low volatility in the Qs, so no real fear happening there either. Then we take a look at IWM, as I had mentioned. In prior areas, I thought we were going to have a little bit of resistance here, which we did for a few days. We chopped around. Then we popped out of that. Now we popped out and we're not to these recent highs just yet. But I think what we're probably going to see in IWM is definitely maybe a sideways chop, possibly a little pullback to this prior support resistance line, and then a resumption of the up move would be largely my expectation on IWM. IWM also all-time lows in volatility. So not quite all-time lows. I guess we were a little lower way back in some of these areas. But again, overall, just a general low. They're to the bottom of the range. No real fear in the market on those. And then we'll take a look at gold, which I had mentioned a couple of weeks ago was forming also this pattern where I was expecting a breakout with some force. And we definitely got that breakout with some force. You can see the volume shot through the roof on that breakout. We've come up here now, and we're probably going to move a little sideways for a while, maybe even form another wedge here. And then often these things will travel in waves, and then it'll make another move higher after it forms a wedge for a few weeks. That's my expectations on the various markets. Now, about that trade idea that I mentioned to you. So let's come back here to SPY. And if we take a look at SPY, what again we see is we have a long-term uptrending wedge pattern forming here. And we also had a little bit of a breakout above that top of that wedge. It's not quite as forceful as what gold was, but I do expect the SPY to largely probably stay in a little bit of a range here and probably climb maybe a touch higher. So it's going to be in a little bit higher range, I think, because of that breakout. But really what I want to set myself up for here, if a pullback were to happen, I think a pullback near the tops of these areas right here, which again is around that probably 649, 650 area. I think that would be a reasonable pullback before a resumption of an up move. So if that's my premise, then I might look at doing a trade something like this. This is what's called a skewed iron condor. Now in this skewed iron condor, I am selling a 655 put. We're currently trading at 657. I'm buying a 647 SPY put. That's what gives me this side of this particular trade. That's basically a put spread that I am selling in this case. And then for the upper side of this skewed condor, I'm going to sell a 658 and buy a 661 call. That's going to give me this side of the condor. Now, a couple things to note here is that this trade has a 72% chance of profit. That's great, but a lot of that is because this entire area up here is above zero. No matter how high the market were to go, this trade would, in its current configuration, close out profitably with at least $28 in profit. So not a huge profit if the market rips up, $28 in profit, at least it's not going to be a loss. And that is part of what makes this chance of profit so high. Now, just to show you what I mean by that, if I were to drop this just a little bit to 662, now all of a sudden I have a $36 potential loss if the market gets up into this area, and my chance of profit dropped to 39%. Now, again, my chance of any sizable loss is not big up here. Maximum I would lose would be $36, but it significantly changes the chance of profit in this trade. So I did a video on chance of profit a week ago. If you want to know more about that and why that number it's a good number to have a sense of, but you need to fully understand how it's used, go back and take a look at that video and I dig a little deeper. But for right now, I think this is a good conceptual educational trade. My break even to the downside here is right around that 651 area. Again, if I take a look at a chart, my expectation is if we pull back here a little bit, that 651 is probably 651, 650 is probably a likely area for this to potentially bounce. And I may even, if I were actually trading this live personally, I would wait for a little bit of a pullback to that area, possibly a little test back down into that 650 range or so before I would put this trade on. By waiting for that little bit of a pullback, I would actually get higher premium here, which would give me an overall better profile on this trade. So to help everyone out with this, what I'm going to do right now is I'm going to save this trade and I'll put it as weekend update trade. And I will share this out with everyone. This is a demo paper trade. I'm going to copy this link. I'll share it in the description down below. You do not need to have an OptionStrat account to make use of this. If you click on that link, it's going to open just like this within your web browser. Then when it opens, you can go in and play with this, or maybe set an alert to paper trade this, that when the market pulls back into that 652 range or so, 651, that you should look and see what this trade would be trading for at that time, and then consider adding that as a paper trade so that you could model it going forward. Maybe save this one right here, and then save a new one in that pullback, and you can actually compare the two going forward, see how they work differently if you get a little bit better entry, or maybe a higher value, a better reward to risk entry. So with that, I'm going to wrap up the weekend update here. Thanks for stopping by, everyone. If you find this to be of benefit to you, please give me a like, a thumbs up, a subscribe, and we'll see you next weekend. Take care.